Hello everybody, welcome again to Cryptonomy. On this channel we talk everything crypto and how economy actually affects cryptocurrencies. We do look at the small picture, but we also do look at the bigger picture and see how the bigger variables actually affect the Bitcoin price from the small scale to the larger scales. I like to have a holistic view on what affect markets, and this has been working out so well so far. Some people just focus on the daily and the hourly chart, but here we actually focus on the as well the weekly and the monthly. We do take the whole business and economic cycle in general, and we don't do trades, but we do actual investing. Um, my basically I'm trading the cycle. So what I'm basically um most focused on is the cycle over, or is there still more gas to go? And that's the question I'm trying to answer. And while I answer that question, I would record my research, my thoughts, and how well I've been doing, and the things I've been doing wrong, and hopefully you can learn something. So, without further ado, let's go. So, first of all, Bitcoin has been stuck in this wedge so far. We did see like a kind of very strong V-shaped recovery. Every time actually we do touch that line, we do get up above it, and the SAM rule really triggered some fear. That's why we actually went below it. But so far we did a good recovery. We're showing some weakness right now. Nevertheless, we're not too bad. We're fighting to break this wedge. That's on the short time frame. Um, do I think we're gonna break above? Yes, I do. But why I think that, because why we came down here was a liquidity flush, right? That looks so like a liquidity flush. And if you've been keeping an eye on this, it also happened during a time where there was actually very low trading volume. So to get this liquidity flush was for so easy for exchanges and market makers and big boys. So it did happen. All right, sad, but it did happen. What we see here is, again, there's a liquidity flush coming, hopefully on the upside this time, and let's see if that happens the next few days. Where we're battling right now again is we're actually under the 200 moving average EMA, which seemed to be very, very tough to break through. Uh, but once we break through these, then really they will act as very, very good support. Right now, they're major resistance. That's what I'm keeping an eye on. We did try to break above it, but it's not doing too well right now. Let's keep an eye. Let's keep an eye on the EMA and SMA 200 daily, and we'll see where they go from that. Okay, so if you look here, before we had the 2019 comparison here. If you do go and take the snippet from the 219, right? This exact snippet right here, and you do take it right here. We were following it very closely. I've been keeping an eye on this since we were here, but like after I saw the recovery, I saw this was so 2019. Also there was like the pandemic news came out here as well. The SAMRO, I think SAMRO what triggered it, but nevertheless still pre-pandemic crash, right? Whichever way you look at it. We did follow it, kind of if you scale it, if you fit it, but we did deviate right now. And what I'm doing, of course, history doesn't repeat, but history does for sure rhyme. That's why I just moved this, and I was like, all right, what if we're doing that right there, right? So what we should see, if we don't, I'm gonna keep having an eye on that, right? Maybe we pull up and we come back to where we should be. Of course, we don't have to follow it 100%. We just need to rhyme with it. That means we can deviate at some points. Um, what I see here is we're still kind of doing the post COVID crash to some degree on a different scale. And if you think as the price is like a bunch of variables, you know, it's like you're in your math class when you have equations that, for example, y equals ax plus, bx plus cx, right? X is still there, but b, c, a, b, and c just changed by factors like 0.5, or like, for example, 1x, 2x, 3x, and then the other equation would be y2 equals 2x, 3x plus 4x, right? Just it's a different magnitude. And that's how I look at this. It's a similar situation because soon we're gonna drop interest rate. We did get a pre-pandemic scare, SAM rule, whatever. I just think it's a different scale from the 2019 crash on a very compressed period. The 2019 one was months, right? It took months to play out. Here we're just taking out like probably 1 month maximum. So what I found really interesting though, I've been analyzing the price for a little bit, and what I found really interesting, what I want to show you. In a previous video, we actually concluded that November, October was a good month to break out because of various factors, like here, the 2019. If you calculate this right, you would get as well 2019. And if you calculate what would happen to after the pre-halving, right, we also get around October, right, August, November. How we got that was we just were checking out the breakouts. When do the breakouts after the wedge happens, right? There was like a wedge, as you can see here, like that. Then the breakouts always happen October, October, November. Yes, look, October, November. Here was similarly October, November. But I did want to take it even a step further. I wanted to understand how significant is the month of October in such situations. Why do we always get bull runs in October, or is it only when we form a wedge and it's a pre-halving year, right? So what's better way to do that than to do primary research and go, actually first what we're gonna go do is gonna have the halving events as our anchor point, because for some reason I do feel like Satoshi had the halving year there every 4 years for a reason. I mean, he is a smart guy. He is a very smart guy. I mean, if you create a cryptocurrency like that, the technology itself was like, when we studied how Bitcoin was created, he just used elementary cryptographic proofs that you learn on your first year in computer science, or probably your second or third if you take the cryptography course early. He just used Crypto 101 technology to create Bitcoin, of course, with coding experience and lotta more stuff, but he was a smart guy that used very simple things, right? That's his brain. He used simple things to create complex and beautiful technologies. Okay, we understand how he created Bitcoin. We can say that he did use simple things. Alright, then can that carry out to the rest of his thinking? Did he have the Bitcoin halving there every 4 years for more than the reason of mining, for cutting supply? Could he have aligned it to align with other simple things in the economic and business cycle to actually give Bitcoin even a better boost for the price? I'd imagine so, yes. I would, if I thought about that, I would have did some analysis, understand the economic cycle, and probably understood it before, right? He's probably a good investor. Trust me. I think it's a plausible theory. Why would he put it there? I mean, many of the famous investors, if you read Market Wizards, actually reminiscence of a stock operator as well. He says he did, at the end of the book, you start to understand that he did market manipulation at the end. He would get hired, Livermore, Mr. Livermore. He died now, but he died because he was too good and he couldn't handle stress of losing so much money and winning it back and making millions and losing millions. So yeah, good investor. Bad habits, bad gambling habits kill you. But I respect him. I really like him. He was one of my favorite investors. I mean, when I read his book, I didn't even know he died. But after I know he died, I was actually pretty sad. Pretty sad for a long time. I look up to him a little bit. So let's get it. What could he have aligned this with? And let's go back to the point. And Livermore said in his book, the biggest advertising to any stock is the ticker itself. Satoshi probably understood that, and he wanted to advertise Bitcoin. He couldn't like put leaflets. Okay, somebody probably put leaflets and all that, alright, but the greatest advertising of any asset, ticker, whatever, BTC is a ticker, it's an asset class, is the ticker itself. How much can it go up? The news will put it up for free of charge. People will start to love it. People will start to be excited about it, be interested on it, learn about it, and word of mouth start to spread. This is what happened with Bitcoin, right? So let's see. What did he align the 4-year halving cycle with to give Bitcoin price a boost so he can advertise Bitcoin by Bitcoin going up? First, we're gonna see why October is first a very good month. What we're gonna go analyze is the halving events here, here, there, and there. Alright? Let's go back to the first halving. We will come back to that. Right now, focus on the green circles. This is halving. The halving did happen in November of 2012. It's a halving year. It happened a little bit late in the year, right? Late into 2012. Usually right now, for example, 2024, we did have it around April, right? April 21st or something like that. Here it happened in November, right? Halvings differ through different, right? The blocks, they get mined by miners, and the faster the blocks get mined, the faster the halving comes, correct? So that the halving event does move a little bit. Nevertheless, this October-November happened before the halving. Let's take it with a grain of salt. But we did spark, not the halving event sparked, but the month of October and November sparked one hell of a rally. That started it. Okay, we could argue that started it or that started it, but that started something that didn't stop for a while. Okay, that started something that went up 2,600%, right? This we'll look at it later as well. Now focus on the halving events. Halving. Here the wedge, right? We talked about that in the previous video. We're not gonna repeat that. Here we're focusing on October, November month. Halving. Here halving happened July. See, July of 2016, a halving year. Here it happened end of year. Nevertheless, the October, November of the halving year, the election year, by the way, October, November, here we have a correction, and then we sparked as well one hell of a rally, correct? Yes, we did. Okay, here 2020, here a halving year. Here it did happen in May. Next one was like in April. See how we're getting closer and closer and closer. October, November also sparked one hell of a rally. So that's 3 times in a row. Election halving year, October, November sparked the rally. October, November sparked the rally. Every halving / election year. October, November is coming up. It is. And just, I hope you understand something, right? The mentality here. Do you think anybody that was investing, selling, or buying Bitcoin here would have known that this would happen? I mean, just cover it up like that, right? Like that. I mean, you do see strength. You do, more than now. But if everybody knew that Bitcoin price would skyrocket 510% from the lows of October, and they were in September or August, just a month or two before, then everyone would have invested. If the mentality was different, right? The narrative here was different. The mentality was different. Here there was indecision, right? People were capitulating or getting more Bitcoin or whatever. Doesn't matter. Here the mentality was different. Nobody. Some would have guessed, and of course some would have bought, but the majority may have not. If you did know, you would have probably invested. If, say, half the people knew, then the price would have rallied even before. So we can understand that during that time of zone, right, the mentality was definitely different. If people knew that Bitcoin price would go up 5x from there, from 11 to 69,000, they would have invested. Okay, don't tell me no, somebody doesn't want to like 5x their money in, what's that period there? In 190 days. Less than a year. Come on, 5x your money. Everybody would have took the chance. We can understand that the mentality here was different. Similar to here. Maybe the jump would be like bam, right? To 140, 200k. In hindsight, you'll be like, that was the best time to invest. But if you knew you'd have invested, nobody knows. We're in such a situation that is very similar to that. Very similar to that. That we kind of form some indecisions, right? Not here, but here. We just don't know what's coming. Here's something that happened that sparked. October, November sparked it. We don't know why. Well, we do. Quantitative easing and, cutting interest rates, monetary supply, liquidity came into the market. Correct? Again, here. The mentality here. I mean, here it was even a phase of depression, guys. I mean, you got a correction that if you cut all this and you look at that, it's not higher for longer. It's goddamn crash. I mean, you're losing your house here. Come on. That looks terrible. That looks very terrible. You almost made you made a lower low, right? Sequence of lower highs as well. Here we started to see some robust price, but who would have known that this wouldn't just again back tumble and make another lower low, right? The mentality here was different. But October, November. Here, October, you saw some very noticeable strength. That you retested, and you jumped, and you never looked back. Well, you looked back a few times, but come on, that's people taking extreme profits right there. I mean, if you made 58% on your money in like 1 month, you're gonna take some profits, okay? On a risky asset. Bitcoin wasn't Bitcoin now that it was back then. Here again, from here, 70%. I mean, you're gonna take some profits. Here too, taking profits, and then a crash. But nevertheless, what sparked this beautiful rally, I would argue, was what happened in October, November. You could say here too, October, November, by the way. Here, September, October, November. But started in October. Similar here, we can say started in October, but we broke the wedge around November. End of October, November. Alright, similar to here. Look at that indecision right there. Confusion. Higher or lower? Where are we going? And then you get October. If you knew back then that Bitcoin would rally this unimaginable 2000%, then you'd have definitely invested there. You'd have definitely sold your house and bought everything you could. Correct or not? So something that usually happens around November, October that sparks it. And Okay, what if it's not a halving year? What if it's now it's a halving year, election year? But what if it's not a halving year? Let's just see. Can we give October, November even to more credit? But you wouldn't. Alright, election and halving years are usually so much better. But here again, October, November is what sparked this rally, right? We got a correction after, but again here, October, November sparked the rally. Here was May, it was not October, November, right? Didn't spark the rally something different. I have no idea. Here, October, November, but most of them are in October. This one, for example, is not October, November, so we can just put an X on it, right? Here, quick, yes, October, November, no, October, November. That's not 2013. Up, October, November, correct. 2014, no, because it's a bear year, right? So we did get nothing there, no rally, we just went down. 2015, September, October, right here. Not a halving year, not an election year. This rally was fueled by October, November, but you did get a crash after, right? Here, 2016, October sparked it. We would say that this could be a rally, right? But it was again May. I think that would be like a mid-cycle rally, that being sparked in May. I have no idea, but that was not from us, not October, November. But you can see the pattern, right? Here, October, November, okay. Here, bear year, October, sparked a dump. But here, something interesting happened. It was 2019, and that's October, November, right? And we didn't really get a rally. Usually, it's bear years, every October, November, but bear years you do get a rally, right? That's from this analysis. This is okay. Let's just remove the maze. Let's just analyze the October, Novembers. You see, October, November, October, November. This was 2011. That's why. That's 2012. That's 2013. 14 bear year. No. 2015. Yes. 2016. Yes. 2017. Yep. 2018. Bear year. Nope. 2019 was the only one. And that was because of lower interest rates. Sorry, higher interest rates and fear of recession. And that's what you get. That's what you get. So we can see that economic factors do actually influence Bitcoin price massively, because that deviated from the trend. Every other year but bear years, October, November is a good month, sparks a rally, except when there's no reason to. So is it the months that Bitcoin listens to, or is it the economic factors? Because if you look at US interest rates, right? Oh, I have it. New price scale. Here we're having very low, like a period of very low interest rates. Here we start going up. I get it. But Bitcoin didn't listen. Bitcoin didn't listen to start going down interest rates, because the Fed may have broken something in the economy. There were fears that the Fed may have broken something. If you look at the news from 2019, everybody was talking about a global recession, global market bubble crash, blah blah blah. I mean, here was awful. Everybody was like, we did get a soft landing, and then we got a hard landing from COVID-19, but everybody was scared. So similar to here, right? SAM rule. Here, let's go to SAMRO. The SAMRO signaled a very, very reliable recession indicator. Inverted yield curve, when it gets uninverted, is when usually the market crashes, right? That's the signal when it gets uninverted, and it's very, very close to getting uninverted. The 2-year and 10-year treasury bills, they're getting very close to each other to being uninverted again. So that's just something to think about. So there are bull cases and there are bear cases for the same situation. Here, October, November, it was a bear year. We went down. Here, October, November marked the bottom. It marked the bottom. But we only got a rally in January. So I don't know if you want to give it a tick or a cross. That for me is undefined. We got a bottom, but also sparked the rally right after. Because in November, October we went even more down. FTX crash right here. And then we got the uptick. Here, guess when did we start our new rally? October, November. October, November. And what you usually see is that, at least in previous cycles, we get 3 October, Novembers, 3 ticks, 1 cross. 3 ticks, 1 cross. But 2019 didn't submit to this trend, and we got another cross, and then tick. I would say that's a cross, right? October, November mark the top. The bear year usually should be 2022, but here we got it in the post-halving year. But then we also got the bottom, October, November. We did not continue going down. See, in 2018, October, November, we still went down, right? And we only went up in March, right? April, March, we started going up. Similar here, October, November down. We only went up to September of 2015, right? So that the cycle is getting shifted a little bit, if you notice, to the left. That's what I noticed. For example, here the peak was like December. Here the peak as well was like December, right? December, but here we did get it like November. So we're getting a left. The cycle is getting shifted to the left, translated to the left a little bit. Not only with the peaks, but with the bottoms and with October, Novembers. So we usually make higher. Like from cycle to cycle, we make new all-time highs. But again, don't take trends as stuff to bet your whole life savings on, because they're just data points that you analyze, and sometimes you do get deviations, you do get outliers, you do get swan events that just doesn't allow it to happen. So what you should be is vigilant. You should track what's happening and keep a close eye. For example, here, I know from this analysis that October, November are some of the months, one of the important months to look at to determine if there's an upcoming bull market or a continuous crash. Because look here, we did see a crash, a major crash here in October, November. Similarly to 2021, right? Here we marked the bottom. Here I would say this would have been marked the bottom, right? October, November, but we got a swan event that marked COVID crash. I would believe if COVID wasn't there and we finally got a soft landing, this would have, we were getting strength here, we're getting higher highs. Finally, we broke that trend. We didn't want to go down. That was just a spike down, and we went right above it. If COVID-19 didn't happen, I would imagine something like that, right? Something like that. I wouldn't imagine that. So that would have marked the bottom. And that October, November would have been a tick tick cross, then maybe like tick 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 cross. We don't know. Let's see. Let's see. So that's on that analysis. That's why I think October November is very important. From this point of view, it's very important to look at October November. Are we gonna break this wedge? Are we gonna really put higher legs, higher highs that can mark? Do we mark the bottom now? The next few months are very important to see. On the short term, I do see an uptick. I am very looking forward to finally breaking the bull market support band and the 200-day EMA and SMA. I think if we break them, that would really bring my confidence back into better prices in the foreseen future. If you look at the Fib channel retracement, again, we're just fighting along those lines. I mean, every time we did get a wick up to the green one, similarly many times previously even, and we keep getting rejected. I think that's an important line to break if you want to see higher prices. I mean, we did break it finally, and it was very beautiful, but the leverage flush was, I mean, have you seen the leverage flush? Okay, I'll pull it up next time. Where is it? Open interest, liquidation. Is it that one? Open interest. No, not that one. No. Liquidations. Nope. I don't remember which chart was it, but looked like a scary leverage flush. Let me get it from my other workspace. Yep. I mean, that was major. That was very, very strong leverage flush. You haven't seen that this whole consolidation period. I mean, you're getting a lot of leverage flushes here. Higher than even when there was the ETF stuff. So that's something to think about. Again, that's an important line to break. I really hope we could see us going back to the 2019 comparison. That would be just beautiful. We are still in line with previous cycle, at least from cycle bottoms. You are still in line, so there's nothing to worry about. As long as we stay in range, I wouldn't worry about deviating from previous cycles. In terms of year-to-date ROI, we're still here. We're still within the previous cycles. This is the halving years, 2016, 2020, 2024. Still nothing changed. That's fine. Nevertheless, ROI after halving, we are struggling, and that's for a good reason. That's because in the pre-halving year, we did have a huge run. Okay, we did have a huge run. Look. Okay, let's take the pre-halving year, 2023, 2019, 2015. 2023 was better than 2015, and so much better than 2019. I mean, we did get a lot. And remember, there's a concept of diminishing returns. So we should be getting diminishing returns, but we didn't. We got some hell of returns, 2023, right? That you do expect that ROI after having to cool down a little bit to go back and match the previous cycles. And again, for the October, November, on average, those are some of the best months. If you take the average plus standard deviation, blah, blah, blah. I mean, look, 40%, 20%, here's 30%, 40%. So the other best months are April and May, but October, November are usually a very good month. In August, I'm happy to see that in red, so we can get, if you see at the halving years, right? You, for example, 2024, you get 1, 2, 3 red, right? 2020, you get 1, 2, 3, 4. I'm happy we get now a bad. I mean, we're having a bad month anyway. Just score it as a third one. 2016, similarly, 1, 2, 3, 4. Right. I'm happy to get one out of the way. Maybe we can get another red month there. Hopefully not. But I would guess August and September would be red. October, November, December would be just beautiful. That's what I'm inclined with, because that's what the average tells me. And usually September is a bad month too. Come on, look at that. But usually, if you look here, if August is green, halving years, September is red. 2016, August is red, September is green. And 2012 usually doesn't tell you too good, but again, you got the October red month here. Even 2012 submits to that. I mean, in the last quarter, the last 5 months, usually get one red month, right? Go 2020, 1, 2, 3, 4, 5, one red month. 2016, right? 1, 2, 3, 4, 5, one red month. 2012, similarly, one red month. So, we're unlucky if we get a red September. We're very lucky if we get a green September, even though everyone's freaking out. I think we're fine. We're just following the cycle, and that's not because of a Bitcoin cycle. It's attached to actually the liquidity and the monetary supply and business cycle and economic conditions. I mean, even some very good article that talks about this is where it's right here. Look, the real reason Bitcoin moves in cycles, right? I'm reading a lot of articles that talk about that, and if you think about Satoshi as a smart person, and if there's, if he wanted to have a halving that reduces the supply and help Bitcoin price push up, then you would imagine that he would also have the halving date in correspondence with other factors that can even give higher boost to the price, because that ticker is the the best advertising tool for a stock or for a Bitcoin coin, for any crypto coin. Let's see what he has to say. So, most cycles actually follow overall economic situations, right? That's what we always talk about. So, moving up a business is booming, and going down then when times are tough, right? Most assets, even the stock market, the housing market, whatever. The halving event is not completely irrelevant as a bull market trigger, right? It does do something. We gotta agree that the halving event does limit supply, and if demand stays unchanged, then that should push the price up, correct? Correct. Except that minor capitulation right now is happening, and they're selling their Bitcoin sometimes, and that, I mean, it takes time. Same as interest rates, you limit monetary supply, but it takes time to trickle down the economy. Same thing, you limit the amount of coins that are given to miners, but miners may have saved some coins that they can sell now, but at some point they're gonna run out of the coins that they saved, and then finally the limited supply would actually take effect, correct? So what are liquidity cycles? So these refer to changes in the availability of cost capital in the economy. What that means is they affect how expensive and how cheap it is to borrow money and spend money. Money also has a cost. It can be expensive and cheap. Liquidity cycles tell you, and now it's a phase of cheap money, now it is a phase of expensive money, for example. So easy access to cheap capital means low interest rates are followed by periods of difficult access to cheap capital, high interest rates. And there are, of course, other things to consider, but that's as simple as it gets. So, why does cheap or expensive capital affect Bitcoin price? Well, businesses are, they invest, they spend money, they grow economies, And some people sometimes, when rich people, for example, I have a business, for example, and if I borrow money to grow it, then I have more money. And what do I do with that money? I can buy real estate, I can buy stocks, and I can buy what? Crypto. Yep. Um, they're all forms of quantitative easing. For example, quantitative easing also is a new form after the 2008 mortgage collapse, right? They interest rates were at 0%, and they wanted to even increase the. Sorry, I'm still sick. The Fed still wanted to inject more money into the economy, so they were like, okay, we're gonna introduce this new form of liquidity because interest rate already at zero. I mean, you can go negative, but they didn't want to do that. What they did was some form of quantitative easing. Quantitative easing is what they did is buy some form of treasury bills or something like that. I read about it, but I forgot the exact terminologies for. But they bought some stuff that increased the liquidity. I think they bought short term treasury bills or something. Usually they can only buy long term, but that takes long to take effect in the economy. So what they did is introduce quantitative easing, where they bought short term stuff to increase the liquidity and cycle even faster, because they don't want to put interest rate to zero, negative, below zero. So the liquidity cycle is one of the main driving forces behind the stock market. Crypto as well, believe it or not. So this Twitter user, TechDev52, what he did was he used bond yields, the high yield spread, and the aggregated balance sheet of major central banks. So what this tells you is that, are they an expansionary or contractionary policy, bank policy? That means, are they increasing liquidity, increasing liquidity in the cycle, in the market, or reducing it? So if we zoom in here and we take a closer look to what's happening, actually we do get some beautiful trends. Okay, so I want you to focus on that, right? That's 2008 from here. So it's a good trend line. What annoys me about this trend line is that this plateaus so much that probably in the next cycle you don't even get so much higher. I don't even like that line. I hope we break off that line one day. I mean, you will at some point, but Bitcoin should go to 1 million, not that line. Come on, guys. All right, so when this goes up, this means it's an expansionary policy. When it goes down, contractionary, right? So when it goes up, Bitcoin goes up, right? 2011, mid-11, right? Bitcoin goes down because the money supply goes down. Again, money supply up, Bitcoin up. We're gonna talk about that soon. And I'll tell you also about I see a pattern here that is pretty nice. Go down, down, up, up, down, down, up, up, down, down, and then here. Hopefully we're breaking, so up, up. That's his view, right? Let's see if that view is actually accurate. We can see that here there's some form of patterns, right? We always get that line and we break it. Once you break it, you just fly to the roof. Line, break it, break, buy the roof, break roof. We're trying to break it right now. I would be actually very interested in getting that live on chart and seeing what's happening here, because that was way before. That was way before as well. So what we get here is like kind of a jump, a little correction and jump, right? Jump, correction, jump, jump, correction, jump, jump, a little bit of a correction, jump, right? There's like a rhyme. It does rhyme. But what I'm interested more is about this line crossing, right? When do we break the line? Look how we tap, go down, tap, break, tap, go down, tap, break, tap, go down, tap, break. Here you get multiple taps that we can count as one. Let's ignore that one. Look, history rhymes, it does not repeat. Alright? tap, break. What I like is this last tap here, right before we challenge the break again. And if you notice, in all those tabs, none of them actually close above. None of them actually close above, except here, right? Those two. Here we close above finally, and we just skyrocket there. And there as well. So I think Satoshi, what he did was align the halving event with the liquidity cycles. And that's why we get those explosive prices to advertise his Bitcoin, the new technology that replaces governments and banks, and keep his identity secret. I don't trust the cycle as much as I trust the liquidity cycles. So that's what we need to keep an eye on to understand. Will Bitcoin go lower from here or higher from here? That is investing while understanding economic factors. Again, look at another thing. That's the MACD for this chart. Sometimes you don't get it, but since 2018, since we started following that trend, once you get 2 green ticks, that marks this point, right? Which marks this point. 2 green ticks marks that point, that point, that point. 2 green ticks. You see that? 2 green ticks. That marks where you're about to break out. Sometimes not, but 4 times out of 5 it did. And investing is just a probabilistic view on the market. So what we do is just analyze things in a probabilistic lens, understand that things can deviate, things can just seduce you, and that's why you need to be careful in investing. You just need to analyze as much data points as you can. Put that all in a lens and just adjust your risk in the market accordingly, either higher risk or lower risk. Higher risk, more invested; lower risk, less invested. That's how I invest. And we got the tick, and that was July 2023. I'd be very, very interested in actually getting this chart live and understanding it, and hopefully I will get that working by next time. It's on TradingView. It's probably not so hard to set up. We will track it live here on the channel. Okay, so the liquidity cycle lines up with Bitcoin bull markets, just as well as having events. Well, Satoshi, isn't that interesting? Satoshi intended the halving to line up with the liquidity cycles. Interesting. Some people actually agree as well. Correlation to the business cycle as well. So, again, we do have correlation to the business cycle as well. So that's the liquidity cycle, that's the business cycle, right? So how we can track the business cycle? You can take the US manufacturing index, right, in white, and compare it to Bitcoin price. So the white is US manufacturing. When it goes up, Bitcoin goes up. When it goes down, Bitcoin goes down. Goes up, down and down, up and up, down and down, and up and up. But what you notice first, the manufacturing cycle goes up first. The economy goes up first, and then Bitcoin follows. Bitcoin goes down first, and then the economy follows. Why? Because it's higher risk. Bitcoin, it's the emotions of 100, 200, I don't know how many millions of people. They can sniff out things in the economy that are wrong before it actually happens. So that's why you get risk assets actually telling you something that is wrong in the market. For example, the stock market can tell the Fed, yo, you broke something in the market, and nobody will even understand why until 2-3 months later. This is why. So this is all, but we can go track the liquidity cycle, right? That's American, by the way. The M2 it's in billions of dollars, and you can see that it's trending higher, right? We were down and we're starting to trend higher. So if you look at it from large point of view, right, we're just going up pretty well. 2019 COVID thingy really sparked it up higher. That's why we gotta cool down a little bit, and liquidity is going up. liquidity. This is the M2 growth, also global supply, M2 liquidity supply, and also in the green you get year over year growth, and this one you also get the normal M2 growth globally, which measures liquidity again. And the green is like, it's the percentage change year over year, which tells you how fast we're going up, correct? So what we can see is that we're actually going up pretty well. Alright, we broke the highs and we're going higher, which we like, which actually again supports the thesis that we might break out in October, November, correct? And we're going up fast. And if you notice, this, when the year on year is negative, signals the bottom, but when we start to skyrocket, Bitcoin skyrockets, we go down. Again, Bitcoin goes down first because we sniff out, risk assets sniff out something is wrong before it happens. Go up, down, mark the bottom, yellow, and then we up. And then I would suggest that we sniffed out some weakness, but we really were stubborn, right? And then we went down, bottom, and hopefully we're struggling to go up again because we did spend a lot of money. We printed a lot of money on COVID-19. That's why governments around the world are actually slowing down their liquidity in their markets. There was one final thing I want to talk about before we end it here, and that's about interest rates. Let's go on the weekly. I'm just leave you. I gave you too much bullish stuff. I don't want you to go invest your whole life savings now. I want to tell you, when interest rates start to go down, that means a recession, and that usually means also a good correction. Except in COVID-19, here we actually kept continuing up, but we did finally go down a little bit. Here's the supreme mortgage collapse. Bam, interest rate down, markets down. Dot-com bubble, interest rate down, markets down. Interest rates down, markets down. That's the Japan Nikkei, Black Monday. It happened similarly, like recently. The Japan trade unwinding, blah blah blah. It's consolidation too, a little bit down, and then, but that was long. Okay, that was pretty long. That was like 570 days, more than a year. The interest rate were high, but they calculated differently before. Interest rate down, markets down. Interest rate down, markets down, up, then down. Okay, but sometimes OPEC did this. Nice. Just something to think about. Interest rate down. Fed meeting 18th of September. Will stock market go down, or at least start a downward trend? We're gonna see that. Anyways, thank you guys for joining us. Hope you enjoyed today's video, and I'll see you next time.